moving on. So taking a look at Loan Product Advisor, we know that the program changed. So prior to, I don't remember when it was January that you switched over? So prior to January, most folks were using DU. Most of you are familiar with DU. It's certainly more common to be using DU than LPA. And then in January, we switched over to 100% LPA. So we get a lot of questions about LPA, mostly because our loan officers still aren't quite used to using LPA. So we're going to take a look at what we need to do to, how to input this in LPA and see if you have any questions. Most of the questions that I get are during this LPA portion of the presentation. So again, if you have questions, please feel free to speak up and let me know if you have any specific questions. Number one here, when you're entering it in Loan Product Advisor, and yours may look different. So if you're using an LOS, the interface may look different, but the data is still the same. So first and foremost, you want to just make sure that you're selecting HFA Advantage. That's the program you want to choose from your drop-down. You will see that option regardless of which LOS you're using or if you're accessing Loan Product Advisor directly. HFA Advantage, that's the program that you want to select. And that's what's going to give you the charter level mortgage insurance and no loan, low price adjustments. Also, your LOS system may have you enter a code. If you have to enter that code, it's code 251. So code 251, product code 251, corresponds to the HFA Advantage program. So this is where we get most of the controversy. An affordable second that does not require a payment within the first 60 months can be entered in the total gift fund field located in the assets and reserves section. You do want to ensure that when the loan is delivered through Loan Selling Advisor, which most of you at that point are no longer dealing with the loan, but you want to make sure that secondary financing fields are accurate. And basically what we're trying to say is if you have down payment assistance and there's no payment in the first 60 months, rather than inputting that down payment assistance as a second, you input it as a gift. And what that's going to do is you're going to get more favorable findings. So we have something, you're going to hear this term more and more, called layered risk. And what layered risk is exactly what it sounds like, different layers of risk. And secondary financing is one layer of additional risk. You may get your loan approved inputting it as secondary financing, and that's perfectly fine. If you put it in as a second and it gets approved, great. But if you don't, then you can consider inputting it as a gift instead of as a second loan, and you have a more favorable chance of getting that loan approved. Now, I get a lot of pushback from loan officers and underwriters because they don't feel comfortable doing this, and I completely understand why. It's contrary to what you would believe. Well, it is a second, there's a note, there's a deed. Why am I not putting it in as a second? It's in our seller's guide, and I've included that section of the seller's guide at the bottom of this presentation, so that when you get pushback from your underwriters, you can either show them in the seller's guide exactly where it is, or you can certainly reach out to me or my underwriting team, and we'll confirm for your underwriters that it certainly is allowed and help them feel more comfortable, give them a comfort level so that they'll approve that loan. So I just want to make sure everyone's clear on that. If there is no payment in the first 60 months, you can put it in as a gift instead of as a second, and you are going to get a more favorable finding more often than not. And speaking of layered risk, that's something I also want to talk about. Quite often I get loan officers that they'll give me a call and they say, well, this looks like a great loan. I met the minimum credit score. My debt ratio is at 45, I'm right there. LTV is at 97, why is my loan not getting approved? Right, I met all the minimum requirements. What's the problem here? But once we start taking a deeper dive into the actual credit makeup of that borrower, and we look at what's in that credit, we start seeing different layers of risk. One of the most common layers is that they just haven't had credit established long enough. So a lot of them have new credit. So they have the FICO scores where it needs to be, but they've only had that credit established for less than 24 months. That's probably the most common one that I see, that they don't have any long-term credit established. So even though they meet that minimum credit score, they don't have a long-term credit established. That's one layer. So if it's only that, you still might get approved. But then we take a deeper dive and we look at that new credit card that they got. And in fact, in one example here on a loan that ADFA loan that a loan officer reached out to me on, they got 2 credit cards in January and they were maxed out by February. That's the problem. You know, that's a factor. That is definitely an additional risk layer. So now we have a 97% loan, we have secondary financing, and we have someone who just got a credit card, 2 credit cards and maxed them out. So that's what I'm talking about, layered risk. Even though your borrower meets the minimum requirements, once you take a deeper dive and take a look at what that credit makeup is, you start uncovering things and unraveling things, and you realize that the borrower is not as strong as you thought. But then again, it goes back to consumer education. Borrowers should have known that you shouldn't max out your credit cards if you're about to purchase a home. Seems obvious to us, but it really isn't always obvious to these borrowers. It's not. It's mind-boggling. It's hard for us as loan officers to realize that, but these borrowers really don't understand. So it's up to us to educate them and helping them understand that even if they got those credit cards and maybe use half of the available loan limit, they would probably be fine. But they're maxed out. They're at like 98%. They pushed it as far as they could. So these are risk layers that we have to keep in mind. Let me see, I just want to make sure I cover one more thing. So you do want to make sure that if you do input it as a gift, that it shows up in the total gift fund field in the assets and reserves section. So before I move on, any questions on that? Okay, and again, if you do get pushback from your underwriters or even your branch managers, whoever, you can certainly reach out to me, certainly reach out to my underwriting team, and we'll clarify that for them. And I do see a hand right there.
How do student loans, how are they reflected in the LP?
What do you mean how?
Well, I mean, I know if you owe more than what you originally borrowed, that's going to have an impact. Is that becoming a big problem?
Not really. What we're looking at is the payment. So it really is going to come down to if there's a payment on the credit report, that's what we're going to use. If there's no payment showing on the credit report, then we're going to use 0.5% as the payment, which is less than Fannie Mae, by the way, which they're looking at 1%. So we actually look at student loans more favorably than Fannie Mae does. Does that answer your question? Okay. Moving on. So when we're taking a look at the loan product advisor feedback certificate, I'm sorry.
I have a question.
Sure.
With student loans. Now, you said if there was a payment on the credit report.
Then that's what we're
Now,
going to
if
use.
it's a 0 payment, would we have to use the 0.5%?
That's correct, yes.
Would you have to use the 0.5% if you had the deferred, the income-based repayment letter with?
If you have your payment letter, then you're fine.
Okay.
Thank you.
You're welcome. Okay, so when you're looking at your feedback certificate, what are you looking for? You're looking for eligible and accept. That's what you're looking for, right? Very simple. Looking at loan product advisor feedback certificate here, you just want to make sure that you verified that you selected the right program. So in the offering identifier, you're going to see HFA Advantage. If you see HFA Advantage, you know you chose the right program, you know you're going to get all those benefits, the charter level, the no LLPA. So you just want to make sure you chose the right program. It does happen. People choose the wrong program. Home Possible, it gets approved, they think they're good, but they chose the wrong program. They just simply didn't pay attention. So you want to make sure that you're choosing HFA Advantage in the offering identifier. You're going to get some codes as well. So these codes really, they're just going to help confirm that you chose the right program. Code 81, it says only Freddie Mac servicers with a negotiated commitment, blah, 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 HFA Advantage. You just want to make sure you got 81. If you see that code 81, again, you know you chose the right program. And then a new addition to the feedback certificate we added was the area median income. So now we'll provide you with what the area median income is for that particular property that you've entered into LPA. Now, we know that the ADFA program, they're not using our area median incomes. They have their own limits. But what you would use this for is to determine whether they qualify for that grant. Because the grant is based on 80% of the area median income, not 80% of HFA ADFA's income limits. So that's why we include the area median income there. Otherwise, you would again defer to ADFA for what their income limits are. The G2 code includes a total amount of down payment assistance or total gift funds that was entered into the assets and reserves section of Loan Product Advisor. So I mentioned earlier that you can use, input that second as a grant. If you do that, you want to make sure that this G2 code comes out to the same as the gift funds that you input into LPA. Now, there may be a case where there's a discrepancy because they received additional gift funds from parents or from wherever that source may be. So again, you just want to make sure that all those gift funds add up correctly. And looking at this code G2 is really going to help you ensure that you've calculated those gift funds correctly. So supporting your business with Freddie Mac resources, we have first of all, we've revamped our website completely. So it has a completely different look and feel to it. So I would invite you just to go to freddiemac.com and see what it looks like. It's a lot easier to navigate through. But most importantly, we want to make sure that you sign up for news and updates, because anytime there's a change, especially to HFA Advantage, you're going to get an email. We're not going to spam you. This is not for marketing. This is strictly to provide you with news and updates about Freddie Mac products. So it's not HFA Advantage specific, but you're going to get additional information about Home Possible and just changes that we've made throughout the year. So I would encourage you to sign up for that, subscribe. Again, we're not going to spam you. You might get 3 or 4 emails in a month of news and updates. And that's pretty much it. So certainly subscribe. You'll be updated. You'll see the changes that we've made to Loan Product Advisor. And then this is the super secret hotline. So some of you may be familiar with the 1-800-FREDDIE line. We have a team of underwriters in Virginia and in Texas that have been trained specifically on HFA Advantage. They understand ADFA's program very well, and they're available during regular business hours. But to get to them, you have to know the correct extensions. If you just call the 1-800-FREDDIE number and you don't enter the correct extensions, you will still get to an underwriter, but you're not going to get to the specific underwriting team that's very familiar with HFA Advantage and very familiar with ADFA's program. So I would encourage you to make sure that you have this number. Again, like I said, we're going to give you a copy of this presentation. If you registered, if we have your email address, you will get a copy. If you didn't register, if we don't have your email address, just reach out to us, reach out to Tim or myself, and we'll make sure that you get a copy of this presentation. But we want to make sure that you first press 1. You're going to enter 1 again, and you're going to enter 1 again. So it's 1-800-FREDDIE, and then 111. You are going to need to know what your seller servicer number is, because they're going to ask. If you don't know what that is, again, you can certainly reach out to me, and I'll get that information for you. But this team, I mean, they've been incredible. I know they've spoken to many of the loan officers that are in this room, and they'll review your LPA. Now, another thing that I want to mention is you can also reach out to me. But one thing I would say is please don't send me your LPA feedback certificate. You should know better, but in case you don't, it contains a lot of non-public information. It has their account numbers, it has social security number, and I've had loan officers email that to me. I don't have a problem with it, but your company probably does. They don't want you emailing that information, and I don't need the feedback certificate. All I need from you is the identifier number, the ID, the LPA ID. So if you send me your LPA ID and say, hey, I need help, I don't know why my loan's not getting approved, here's the LPA ID, I can go into the system, take a look at it, make some suggestions, or if we need to escalate it, we can have our underwriters take a look. our underwriters will take a look and they'll give you a call. And they'll usually give you a call the same day, if not the next day. And they'll review that feedback certificate from top to bottom so that you understand what changes you need to make, or so that you understand at the very least so that you're not spinning your wheels trying to get a loan approved that's not gonna go conventional. They'll clear that up for you and save you some time. So it's a great resource to have. I know, like I mentioned before, many loan officers have reached out to them already and have been provided with that additional level of service. And so with that, I am wrapping up, but I'm going to now introduce our friends from Essent who have helped sponsor this event. And Scott's going to come up and talk a little bit more about mortgage insurance and how you can cancel it and single and split premiums. So Scott, come on up and thank you for your time.